Happy Friday, traders. It is 8:01 a.m. Chicago time, September 12th, 2014. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news. Polling shows the no votes for independent Scotland taking lead again by 4 points, with 17% of voters still undecided. So the pendulum swings between yes and no votes, and the most recent poll shows that the no votes, in other words, the unionists, are taking the lead on the Scottish vote. The British cable is reacting to these polls. The U.S. yield curve is seen steepening ahead of Fed next week, expecting a more hawkish tilted discussion on a return to policy normalization and an end of QE3. So this is an important meeting next week because the market is actually pricing in and expecting the policy to change, or at least the verbiage used by the Fed to change. So we're going to watch out for that. And then at 7:30 today, Central, we have advanced retail sales for August, 0.6% in line. Looking ahead at 8:55 Central, that's 25 minutes after the cash open, Michigan confidence prelim, this is a fairly important number, 83.3 expected. And then at 9 o'clock, just a half hour after the open, we're expecting business inventories at 0.4%. Let's take a look at the charts. So, bigger picture, let's back up a bit and pull up the fundamentals chart and see what the health of this movement is. This is the SPX chart. Overall, still holding a bullish trend, minor pullbacks. So we had a pullback at the beginning of the year, April, and a decent one July, August. And we've taken all that back, made new highs, and then yesterday we reversed the drop. You can see here on the SPX cash, we had a nice pullback almost to 1980, and then we're putting in a nice return. Basically, this is another retracement. Very shallow. If you look at this, if you're a fibber, you'll notice that the swings pullback is very, very small. It's like 10% or something. There really isn't much room. The market's not allowing very much room for the sellers to dominate before buyers step in as they see value in prices. Remember, after all, the market is an auction, and it'll always be an auction. And so, if participants are jumping in because they see prices too cheap, then you have to weigh that very heavily and account for that. The New York Stock Exchange 52-week highs versus the 52-week lows is very tight. And we're seeing a drop in new 52-week highs, and numbers are in a dead heat between the two. This is kind of interesting. At the moment, it just seems like the market's just standing by. But stocks have not been making 52-week highs as they have been in the past. But we've had instances here where the 52-week highs crossed below the 52-week lows and came back out. I'm not sure what to make of this. I cautiously believe that the 2002 even high in the December contract, which is the all-time high in the S&P futures, is likely to be taken out. So I'm looking for this to turn back up today and continue higher, but the market's not showing that promise. The net New York Stock Exchange net issues is continuously gaining. So is the net volume. So Um, Conflicting picture here with the 52-week highs and 52-week lows. It just seems like stocks are having a harder and harder time making new highs versus the run back here, or even the run back here on new highs on the index. Okay, so that's a bigger picture view. Look at the futures. The futures are still in a balance zone. The balance starts on the 19th of August, and the market has generally not done anything, much of anything really. In fact, we've breached this, so it needs to go. So overall, we're still trading that point of control, the MC point of control. We're stuck here. Currently, we're trading 1988 even, right against the 1987.50 point of control. So expecting today to be a fairly choppy day. There's very little on the horizon to push this along. There are no holidays or anything, but it is the weekend. We'll see how this plays out. Pretty decent low put in here at 73.50 on the December contract, and a swift move away 2 days ago. And then yesterday, again, it found buyers as expected and started to push higher. So overall, the market's holding up pretty well. It's maintaining its course. It's maintaining its course, and it's pushing for a return to the more recent highs. The target today is 92.25, 92.50. We're looking for this point of control to be tested and for this range to be taken back. We are, for a shorter term MC, we are basically above the short term point of control here at 87.50, and we're working our way through these high volume nodes here on the micro composite. So we'll see how that plays out. If I expand this further to where we have it on the composite, it's not going to affect anything to add any of this in. So overall, the market looks like it's recovering, but is maintaining balance. So you have to be aware of the fact that it is in balance, and to think short term with trades. That's just my approach. Of course, I'm just a day trader, so I'm just looking at what is next, what is likely to be next. Right now, the market looks to be opening just on the edge of yesterday's value in range, and yesterday's high was fairly weak. If you look at this high, quite a bit traded here right against the high. 3,365 contracts traded against the high before the high itself was traded for 34. That's not a strong rejection of the high, so I'm expecting it to be taken out. So overall, even though we're close to the overnight low and value is below us, the most recent value is below us, the expectation is for it to be responsive, and try to push towards 84.75. But I think overall the market's likely to take out 91.50 to 92.25, 92.50. That's the main hypothesis. If it doesn't do that, if it starts off by pushing towards yesterday's close at 89 and takes out the high 1990 by a couple ticks before it finds sellers above the overnight high, then I expect a quick drop to 84.75, push through to around 83, and then for it to chop around for the rest of the afternoon. I don't expect it to go anywhere in that scenario. Okay, that's the main look at what we're expecting for today. The overnight market's not showing us anything. Overnight volume is very, 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 very light at 90,000 contracts. 90,000 contracts in the on the overnight session. I'm seeing on my platform, I'm seeing 192,000 versus 175. So most of the volume has moved over to the December contract, which is now the front month. Okay. Other than that, looking at yesterday's auction, fairly straightforward. wasn't sure where to put the OS high. There could be an argument for an OS high at 83.25. It was double tested here. I'll, you know, I could take either one. I didn't move my my opening swing, but the market basically took a very quick stab lower, found buyers, pushed high to high of 83.25, pull back to 81 just to tick above the mid. 83.25 again, weak high, so the expectation is for a higher high overall. If you recall from my tweets, if you saw my tweets, I did say that the overnight high, the prior day's high, is very weak, and the expectation is this high was going to be taken out, was likely to be taken out, and for this point of control to be tested at some point during the day. So, in a very strange rotation here, the market goes from 85 it goes to 85.75, pulls back to VWAP, puts in a lower high at 85, and it just rockets down, which was very, very odd, right to value low here, basically to the tick, takes out the IB low, and then crosses all the way past the mid, past everything, and goes back and breaks the IB high very quickly after that. It's very strange. In a half-hour time span, it tested the IB low and the IB high, and then finally it took out the point of control here, and then so the only thing left was for this 88.25 to be taken out for a push to test that weak high, and that didn't happen until later in the afternoon. In fact, right after I left. Pretty decent delta on the close, and the market ended up pushing to 89.75, taking out this 88.25 by 6 ticks. So it accomplished what it was expected to do for the auction, but in a very, very strange drop here, and then it just took all of this back. It's almost it looks almost news-driven. I'm not sure what caused that. That's the way things are shaping up for today. I remind you again, it is Friday. Friday is a good day to exercise your patience and be picky. It's not fun going into the weekend with a hole in your pocket or in your trading account. Just monitor your risk and trade based on what you think are probabilities rather than what you emotionally feel, or getting sucked into the action on the dome. Stage 5 traders, we have our webinar at noon today. We'll go over the pop quiz, and I want to remind everyone we're hosting Stephen Kelly again. He uses a jigsaw trading tool and trades the Euro stocks among other products, and actually posts his trades live. He trades very small, but he's a very consistent. He follows his plan consistently, and the reason I'm highlighting his progress is because it's just important to see what someone else is doing who keeps things small, keeps things real, and is very consistent about their approach to the market and their read of the auction and the order flow. And that's what he's good at, reading order flow, checking on liquidity coming in into the market, where, and so on. And that's what we want to look at. Many of you have asked why I'd be hosting someone who's basically trading small, and I guess the more popular thing is to have someone who claims they make a lot of money or whatever, and to have them talk to you about what they're doing. I'm less interested in that, and I'm more interested in seeing what is real. Stephen has his account with Stage 5, so I'm able to see what he's doing, and I'm able to know that what he's talking about is real and what he's doing is real. So that's why we have him on. It is not for you to be enticed by someone who trades big or anything. We've done that with Christopher. With a cotton trading, this is more about looking at what someone else is doing and expanding your horizons and keeping an open mind and seeing what someone else is doing and what tools they're using. That's what Stephen's here for. That'll be on Tuesday at 3:15 Central. I've posted the link, and I'll post it again I've posted the link to the GoToWebinar, and I'll post it again today to give you a chance to hop on to that. We're just this particular one is a follow-up on the last Convergence Tuesday Spotlight that we did. And there were many questions that came out of it because it was very interesting to see how he approached things. And so we're following up now to have him on to discuss that. Anyway, that's all I have for you. Good luck today, and I'll catch you on Monday. Take care.